Welcome to Markets Now. I'm Michelle Rook with Kent Beadle Paradigm Futures. Mostly lower prices here in the early portion of this session, with the exception of the cattle market. And Kent, I want to start off talking a little bit about the soybean market because we had just a really nice day yesterday. So we're down this morning. Is this profit taking, or have we seen a little pickup in farmers selling?
A little of both.
A little both.
Although open interest did rise yesterday, and so with a record short position from the speculator, I'm not sure that this was short covering or surely there are some longs that maybe took some profits, but actually I think we ran into some technical resistance at the 45-day moving average, and I think we probably saw a pickup in farmer selling that would be responsible for the sell-off here this morning.
No doubt. And then we are hearing just a little bubble up of some China economic concerns again. I'm not sure if that's having an impact, but it's possible, isn't it? Especially when you've got soybean meal down a little bit.
Yeah, so they have real issues in their real estate sector. They have built enough housing in China over the last 20 years to essentially house their population once again over. And obviously, there are no people to put in those buildings, and as real estate developers, they need paying customers, and so you're seeing a number of bankruptcies. Evergrande was the major one. We had another one today, and that just is sending a few shutters into the soybean world. Curious as to whether or not it will have some longer-term impact on the soybean demand.
Yeah, I do want to mention though, soybean oil is still up, and boy, we've had quite a rally there on the heels of palm oil. Is that going to keep going, you think?
Well, I certainly think that it can. If you think about the range of soybean oil over the last couple of years, 45 cents has sort of been that low water mark, and we've traded as high as 75 or 80 cents. And so, at 47, 48 cents a pound right now, I think there's certainly room for some upside here. We believe that the renewable diesel community is probably taking advantage of this price spike and locking in some of those feedstock supplies for the renewable diesel production.
That would certainly make sense. Corn market kind of setting back here with soybeans, but we've kind of hit some chart resistance there too, just like beans, haven't we?
Yeah, also the 45-day moving average in the May contract, 50-day moving average in corn. Those are spots that the market is aware of, and so far we've stopped there. It's been a good rally, and we've seen the market act very differently as of late. We tend to be lower in the morning and close strong, and we may still do that again today. Who knows? But we've run into some resistance, and we're probably seeing some farmer selling in corn as well.
Yeah, both corn and soybeans have had a nice rally off the low. So some farmers are rewarding the market, it looks like. Wheat market is down. And of course, we've just continued to be underpinned there by these lower Russian prices and China cancellations. We didn't get any this morning, but there's fear of more, isn't there?
There may be fear of more. The quantity that I had heard was canceled, I think pretty well got eaten up by yesterday's cancellation. So I'm not certain that there is any more. It should be noted that we have been loading about one boat a week to China of soft red. And if we were to keep that pace up through the end of the marketing year, we would probably hit the USDA estimate now that we do have these cancellations. So I'm not necessarily believing that we're going to have any more, but it is interesting that we had 3 days of cancellations in a row. All 3 days we traded lower and then reversed and closed higher on the day. Without the cancellation today, maybe we won't get the reversal. Who knows?
Yeah. But again, Russian prices have dropped below what, $200 now?
Yeah, they're offered at $199 is what we hear. And of course, the milling wheat futures contract had bottomed out at $192 and has rallied back to $197 or $8 in Europe. So, wheat prices are low. There's no doubt about that. Of course, there's an awful lot of wheat business in the world that we were never going to get anyway. And we tend to focus a lot on that European and or Ukrainian Russian business into Egypt and the Middle East. And that's business we haven't had for years. And so we tend to be overly focused on it. I do tend to believe.
Yeah, you and I have talked about that before. Cattle market, we are seeing some follow through buying here this morning, which is nice to see. Boxes have been on the rise here, so maybe is that part of it? And are we negating maybe this reversal that we put in last Friday, you think?
Yeah, well, I mean, the reversal still, maintained sort of a trading range that we've been in here for now, 2 or 3 weeks after what had been a really, really good rally. And, the way I look at the cattle right now is a market that is correcting itself with a sideways move. That's actually a pretty strong market signal. And I think if we now break out again into new highs, that we probably have some room to run.
Gotcha. We'll see what cash trade does this week. That'll be key. Hog market going the opposite direction. So are we seeing some profit taking there or maybe some hedge pressure?
I think some hedge pressure. We've seen, hog margins in the industry improve for this summer by about $25 a head from where we were in early January. Now, that doesn't mean that hog production is massively profitable by any means. We're essentially erasing a fair amount of red ink that we've had up until this time. But, when given the opportunity to lock in some profits after a pretty tough year, I think that we're definitely seeing some margin hedging from the industry.
Yeah, in those back months where we're above $100, you better be taking advantage of that, right?
Right. I would say that the increase or the seasonal increase in cash prices in hogs have slowed down a little bit, and that's probably why we've seen some recent pressure in the April contract.
That makes total sense. All right. Thanks for joining us. Kent Beadle with Paradigm Futures, joining us for Markets Now. Remember, futures and options do have risk and are not suitable for all investors.